This is Rod Kusin and Spoon Man for Risk. On the morning of October 24th, 2016, we're going for a home run here. We're short. We've taken another short right at around 40. Well, right at 46.75. We took it right up here as we saw these overbought lower highs develop in here. We took a short, and we're holding that short in expectation of a drop down to 42, to be precise, right in here. Get the home run should take us down to 42. Okay. Now it almost did that earlier, and then we bailed on that because of some divergence in the premium. But this is the typical home run pattern, and we should be able to see this materialize and drop down to 42 a little later on. We don't have anything else that has actually dropped into the first standard deviation as of yet, so it seems like we're fairly safe on that. So in any event, we're holding a short. We expect 42. As you look at the volume, though, at 42.50, it's a little bit of a concern, because that's what's, if you see what happened here, we came down to 42.75. Let's go back to the matrix and show you what that is looking like. Pardon me. Let's get this up here. You know, right down here at 42.75, you see how volume has dropped off, and then at 42.50, 42.25, there is no volume as of today. There's none down there. So that's kind of a gap, and usually gaps are filled. So that's a good reason to actually expect this to drop down to 42, to fill that gap in data. And it could continue on down even further than that to this other gap that's down at 40.50 and 40.25. Again, nothing there. Just, well, virtually nothing. We've got a few contracts as it shows up in the volume column. But that's extremely low volume. It's even lower down here. Even lower down there. So that's where we expect this to go, and we'll come back and recap as the market moves lower. Oh, and for those of you that are kind of looking at this and wondering, what has he got up on the screen? Well, let me go ahead and take a moment to explain. Now, our premium threshold indicator is capable of doing a lot more than we've already discussed. And in fact, let's extend this out a little further. You notice that we actually have 3 threshold indicators on the screen here. I just want to extend this out to 12 o'clock. Now, what we've done is we've modified the threshold indicator to read the ticky, and then we've placed it on the screen in such a way that it can read and plot the YM premium as well. So what you see on the screen, of course, then are 2 data feeds, pardon me, 3 data feeds. The ES here, let me take that back. Let me take that back. We've got actually 5 data feeds. Okay, we have the ES, the ESI index, the ticky, the YM, and then the YMDJI, which is the YM premium. So we have actually 5 data feeds on the screen. So now, in the light of that, we're able to keep track of all of the significant market internals that we're monitoring. And if it wasn't for the fact that we were already short, we probably would be looking for an opportunity to get short. And this, of course, would give us plenty of data to see that. But that's what we've got. We were able to plot all of this on the screen to really keep a close eye out on everything else that may be happening here. But that having been said, we're able to anticipate this low for several good reasons. So we'll come back as we progress along those lines. Okay, we now just dropped into 42.75. And let's just refresh our charts. Now we're back up to 43.50 as we're doing this. So we had a lower low on the premium here, and that's good, and a much lower low on the YM premium. Ticky has not really dropped that as low as it ought to. We need to see this down at 18, maybe 20 or 22. So it's really it's not really divergent from the stat. Well, it's not really predictive. Let me rephrase that. It's actually divergent in the sense that this low on the ticky was only a 14. Now, obviously, it's a little bit lower than the last pivot, but that wasn't a big one to begin with. So we should have been lower, is really what it amounts to. So the ticky didn't agree, and we're going to move back up a little bit. But we do anticipate a return. We'll just have to come back a little bit later and see how we handle that. But certainly the YM premium, as well as the ES premium. YM premium is down here. ES premium is up here. And so they both forecast that we'll be returning to that price. So we'll come back. Okay, here we go. Back to 42.75, and now we have to look real close, like on the premium. Now the YM premium dropped nicely here, back to 85. The ticky has not really dropped much lower. It was at 16 earlier, and it looks like it may have dropped to 18 here on the way down. Yes, it dropped to 18 on the way down, but now it's nice and divergent. So we didn't quite make it just yet. And there's your divergence. You see, there's your divergence there. So this drop didn't quite make it. Now we believe it's still going to go down here, but all the same, given the divergence here and the failure to really drop any lower on the premium in particular, it's a probably for many traders this would be a good reason, to just go ahead and take profits at this point. But we're going to do that. We'll jump back in if we see another good opportunity to short this. But we decided to go ahead and bail on this position at this time. We'll wait to maybe get another opportunity to short this, which maybe right now. just try it again. We'll take our profits and move back into a position and see if we can't get this thing down through this area of very low volume. Now, there's been a little bit of improvement. I'm not sure how that happened. We didn't drop down to 42.50 yet. So let's see if that happens here. Premium is not forecasting a drop right here. In fact, we're getting lower highs, but we expect it to drop nevertheless. Ah, there we go. All right, there it is. Now, we failed to get into this trade. We'll take a real small position here, because it really looks to me like we're going to move back up. Yeah, that's probably not wise. Instead, it looks like we're going to move back up. And we see that because, again, you look at the divergence on the YM here. Now the ticky moved down to 18. That's what we would expect. Ticky's moving up. Oh yeah. And the YM moved up, Ticky moved up. Yes, premium also moved up slightly. So let's go back to the IB and just look at that. We came down to this standard deviation level, very close to it at least. Nothing else has done that, only the ES. And that's, okay, now we hit 42. Okay, that was our target, 42. So we just look at the premium now and verify that there's a bounce there. But there's nothing happening on the high side just yet. There we go. Okay, a little bit more divergence there. That's good. Good, good, good. Premium stepping up. Okay, this will take off. So we went long. We went long at the bottom. I think a little bit too heavily. It's a little more than we want to be trading here. Okay. All right. So we'll just kind of ease out of this position and call it a day. Nice trade. Nice. This is the home run approach. If you don't know that, go to the RSKsys website. Look at the home run. You'll see how we do that. That's what we did here. Made good sense. Nice move down to this level, and you can see it right on the volume matrix as well as a good potential target. We may go lower. We may go lower. We're certainly fairly early in the morning here yet, so in any case, that was a good place to exit this trade. Nice step up in the premium. Showed you if you were short, another good reason to get out. And you know, we've gone ahead with just taking a long trade. We hope to get it right back up there to 43.25, right in here. We'll watch the premium to verify that, but then we'll just bail on our position and close it out for the day. So that's how we do it. If you're not really sure about what we do, come take a demo. We have retooled this indicator. It's extremely accurate, and we're making it available as a standalone product. You do not have to buy the entire system to acquire this indicator. You can teach yourself on how to use it. It's really not that difficult. It's available for $750 through our website. And if you do want to have some personal tutoring, we charge $150 for the first hour, and then we scale that depending upon the number of hours of personal tutoring that you may need. But that will keep your overall costs down considerably, rather than having to purchase the entire system. You purchase what you need, and we feel that you can make tremendous headway in the accuracy of your trading through the use of this indicator. So we highly recommend it. So come take a demo, find out a little bit more about what we're doing here. I'm Rod Kusin, Spooman for Risk.